What's up, dudes and dudettes? This is Diligence here, and it's kind of late at night. I was gonna make this video earlier, but I think I'm just gonna post it, and then we're just gonna make a thumbnail, and you guys probably will see it tomorrow morning. So according to the Nasdaq, which is the most reliable source, right? Just like the internet. I'm just kidding. They're saying that the earning announcement for MMAT is November 12th, 2021, which is today. Okay. So I think according to, George's precedent or heuristics that we get from George's previous earning releases or calls, usually it happens in the afternoon, right around like an hour or 2 hours before market close. But I don't really think they're gonna release earnings. I don't see any specific rumors coming out. I heard some rumors on Reddit and on other people's Discord and on our Discord that it might get delayed until next Tuesday. So I'm not really sure what is going on here anymore. But what is to be expected on this earnings is actually we want George to really talk about the purchasing orders. They're increasing purchasing orders that we had confirmation somewhere around like early October, late September. Let me take the notepad out. What we really want to stress about is in this earning call is the 8.9 million purchasing orders. At this point, as a long-term investor, we don't really care about how much margin they're actually making in these purchasing orders. But as long as they're securing purchasing orders, that means there are customer demand. So this indicates there are customer demands, which potentially would lead to a big contract, right? Potentially leads to a new contract. And again, like the market isn't doing super well these days because of the energy 2-week squeeze that a bunch of people are doing. But in terms of for MMAT, what people are really missing here is I think I will either post it on Patreon or maybe on YouTube. We're gonna calculate, or we already calculate the enterprise value of MMAT, sort of like adjusted with some DD multiplier, let's put it that way, or let's just say adjusted with some multipliers, or adjusted with some assumptions of cash flow that they have, right? And we concluded that their share value should be around 4.7 to about $4.8, okay, per share. Assuming that they're not going to issue more shares, and honestly, I think there are too many outstanding shares for MMAT, so don't really want to flame anyone or anything, but hey, this is like the merger deal, if you get what I mean, right? Also, if you guys want me to sort of post a very factual and objective MMAT merger timeline and the corporate finance spiel or perspective behind that, I can also make a video in that, but it's probably gonna take a lot of editing. If you guys don't really like that kind of content, then it's not really worth my time really. If you guys want that kind of content, and if we get, I don't know, if we get 50 likes on this video, I'll make that, right? Because if we get 50 likes on this video, that means at least 50 people will watch it. It probably worth my effort if I know deep in my heart that if 50 people is gonna watch that video, I'll make that video, because that video there's gonna be some more visuals, because without visuals, just me talking, it's gonna be a little bit hard to explain in terms of like the history of MMAT, like the timeline and everything. Maybe I should include like maybe the timeline of how George get involved with like mana material, right? So right now, if we go look at Weibo, apparently my Weibo isn't opened, which it should be always opened, but somehow my computer is doing me a trick here, so I'm not really sure what is going on with my computer. So we're just gonna wait while I talk a little bit. So if you go on Weibo and then check the MMAT share price right now, we will see that MMAT actually went down to $4.7, right? 4.72. And we talk about this, right? This line is the G spot, right? The G spot line When the stock stabilizes the G-spot line, we will have a very high probability that the stock will climb up to $5.5 and to $6. But when it goes down, then we're talking about closing it up to the lower bound of the share value that we deducted from the enterprise value. That means if there's any good news of the earnings, the stock should be higher than $4.7. Okay. And ideally, or technically speaking, it's supposed to be higher than $4.8. Why? Because remember when we do the same exact calculation when it's at $3.8, and then they just happen to buy Nanotech, and Nanotech worth about $1 per share. So then if you do that math, then right now our value is supposedly to be $4.8. So if you buy anything right now at 4.7, you have a 10-cent sort of upside. Not really guaranteed, but implied in there. But it's actually better to just buy options at $5 options at 4.7, because by the time it reaches $5, and it will probably trigger a small FOMO squeeze, then all of your option contract at $5 options at the $5 strike point is going to worth twice as much as right now. So right now, let's just say I think it's 60 cents per contract. So $60 technically per contract if you buy it, because every contract worth 100 shares. So if it's 0.6 per contract, then the actual contract will cost you $60. Then by the time it reaches $5 or 5.1 or 5.2, then you're looking at if people like FOMO in and buy we have a lot of people buying $5 call options, then you will see the dollar amount for $5 call option will go to $120, which is $1.2 per contract, right? Or if it reaches $6, then it's going to be 1.5, 1.8. It really depends, right? But at this point, I just want you to guys know that in terms of the corporate finance perspective of, technically speaking, okay, MMAT does not have any debt, right? They have more purchasing order. That means they have more revenue potential. It's sort of like a meme stock. It's sort of like a hot meme stock because it's technically part of a metaverse, and you have some news coming out saying that they might land a big contract. You see George talking about the future of the AR and VR segment, and even though the general market isn't performing really well, but due to the fact that their company actually doesn't have any debt, that make it a very appealing investment, unless they decided to accelerate the way how they spend money. In terms of like acquire another company in this very weird period of time, or there's going to be anything like very controversial coming out about this company. By the end of this year, if there's nothing huge macroeconomically speaking, or just in terms of management of the company speaking, you will probably see $12 million purchasing orders, which will probably rest the stock at about $5.8. And a major analyst of a lot of firms, especially they're hopping onto meme stocks or small cap stocks, they're saying that the end of the year prediction for the stocks is somewhere around $6. So our end of the year projection is probably $5.8. But we're not accounted for any real-time FOMO action, because if you go look at all of the volumes, we don't see any significant volume changes over the past 2 weeks actually. So if we just see twice the amount of this volume, you will see a significant spike up. Which just means A, the market itself is not really doing well, and B, the market itself is not really expecting a huge change in terms of like a bullish outlook, even a lot of people are still saying that SPY is going to keep going up. But the small cap segment is going to hurt a little bit. But at the same time, when taper happens, there are some side effects to small caps. If it's a small cap company that does not have any debt or utilize their debt really well, then their equity value will increase, because that means, in terms of when their cost of debt increase, and then because their cost of equity is not based on cost of debt, that means their entire expected return of this company will increase, because they don't need to spend the cost of debt. So the implied equity value will go up, if that makes sense. Hopefully it does. So then again, if you're just here to listen to a end of the year price prediction, then we can give you guys a sort of like a safety one. The upper bound is $5.8 discounted or not including any big FOMOs that people start buying in with huge volumes, and maybe you will see a spike up to like even like $6.5 or something like that. And then if that happens, what you should do is, if you hold physical shares, you should just sell CCs on either on a monthly basis or on a quarterly basis, depending on your time horizon, right? But a safety upper bound $5.8, a safety lower bound. There's actually a possibility that will actually go down to 3.7 or 3.8, but in terms of like an enterprise value standpoint, that will be a little bit undervalued. So if it goes down to 3.7 or 3.8 again, we're probably gonna load up another couple of $4 call options on the leap, and then basically you just sit down and wait. It's kind of simple. Like when a stock price is going under its enterprise value, and you know that they made a recent acquisition, that the acquiring company, they acquire like 100% of the company, and the acquiring company is expected to see a higher revenue increase, no matter like if their cost is the same or increase a little bit, as long as their total revenue count is going up and total potential revenue count is going up, and their outstanding shares have stayed the same, that means it's technically undervalued. All you have to do is just load up on a higher time period option, or you start loading up on physical shares. But again, I do think loading up on physical shares is kind of risky in its own way. We will explain it in other videos when we put up tutorials about the difference between holding options and holding physical shares. What are some risk management things you need to do when you're trading options or just trading stocks? I always talk to my Patreon members, and I always say like trading stocks is easy because your maximum risk is actually determined, but when you're trading options, your maximum risk, even though it's determined, but due to time value and volatility value, it's kind of like a roller coaster ride. Okay. Anyways, this is it for this video. Hope you guys like those kind of content. And if you want to see us more often, see more in-depth tutorials, in-depth analysis and due diligence, smash that like button and subscribe. See you guys on the upside. Oh yeah. Keep tuning and wait for that Expensify video. I'm in the process of making it. Just happened that it's already past midnight, so I gotta go get some sleep so I can trade in the morning, and then I will get you guys the Expensify video, and maybe I'll get you guys a PayPal video, and maybe a Pfizer video, and maybe a DraftKings video, because I'm sort of a little bit long on DraftKings now, due to the New York new gambling legislative stuff changing going on, and we might see some interesting stuff in terms of how gambling industry is gonna pan out in the next few months, the entire nationwide, and because really a lot of liberal states are looking for extra revenue for their government because they're overspending. But anyways, I don't really want to get into a lot of the politics, but I can basically sum it up in the drafting video. All right, see you guys on the upside.